thank you for joining me. It's yeah, I think we've been following each other on X for a little while now, so it's nice to actually put a name, face to a name, and meet you, although virtually,
Yeah,
of course. But thank you for coming on. Thank you for joining me, and I'm excited
our
about our
pleasure.
conversation today.
Let's talk about stocks.
Yeah, investing, stocks, all the good stuff. I think maybe we should start with letting the audience or the listeners, if you're watching this or if you're just listening on audio, maybe we should start with talking about your portfolio. Like what we'll try and like lay the groundwork as to what kind of investor
Hmm.
you are, what stocks you're interested in, and then we
Hmm.
can build from there. Now, I did some stalking. Sorry about that.
It's all good.
And I managed to find a post from April on X with your portfolio. So I've got that in
Mhm.
front of me, but I don't know if that's the most up to date version. So maybe you can just like talk through what you've got in your portfolio at the moment.
Yeah, I don't think I have changed my positions that much because
Mhm.
for me to add a new position, I have to do a lot of research. So you're probably good in terms of the stocks that I own. The allocation might be slightly different. Like for example, right now, SoFi has become like my biggest position,
Okay.
and second biggest would be Robinhood, which in the past I would have been the opposite. And then Tesla number three, and I have a bit of cash, Enphase, Airbnb, Hims, Palantir, PayPal, and DLO, which is a payment
Mhm.
processor out of Latin America. So I think that's probably the same list that you have. It's just that
Pretty
the order
much.
might be different.
Yeah, I don't have PayPal on my list, but I have all the others.
Yeah, yeah. I added PayPal not too long ago,
Okay.
but yeah, that's the only difference.
Uh-huh. So I mean, we definitely have some crossover. We both have Palantir and Tesla, so we'll
Mhm.
definitely talk about those two. But in terms of, so your biggest position at the moment is Robinhood, did you say, which is the same as it
I
was
used to,
for SoFi now?
yeah, I used to be Robinhood because Robinhood sort of did a 3x on me, so I've just
Yeah.
became the largest.
Uh-huh.
But I've done a little bit of investing now on SoFi, and SoFi just been adding and adding. I
Mhm.
just get plenty of dips on SoFi, so I just keep buying more, and
Yeah.
it has surpassed Robinhood. I guess it depends on the day, right? Like when
Yeah. Of
SoFi
course.
goes above seven, it's my biggest. When it
Hmm.
goes below seven, then it's my second biggest. But yeah, I'm leaning more towards like the fintech side. As
Hmm.
you mentioned, also like Palantir, which I would think I've heard as your biggest position. Although for Palantir, I sort of feel like I just didn't get a chance to buy a big enough position because I started buying at seven, eight, and it just started running on me. So I never got to build like a meaningful position. That's why it's one of
Hmm.
my I think I have like 5 to 10% of my portfolio. It used to be like 1%, but it just grew to that size. But Palantir started running on me before I could actually
Hmm.
like build meaningful amount of shares. So I'm just a little bit sad about that.
Yeah, I think even people that manage to get a lot of shares early on still probably feel like they don't have enough. I think that's just a common thing, isn't it? But even, I was buying around the 6, 7, $8 range. But
Wow.
yeah, but unfortunately, I also think that I probably should have been buying more because at the time I was thinking, I was really convicted and I was really sure that it was going to do well, but I didn't feel any sort of urgency. So I was just adding here and there, building my position slowly, thinking, oh, it's chill. I've got time. I'll just keep adding. And then, like you said, it just took off, didn't it? But I don't know how
Yeah.
you feel about it now. I still think you could obviously argue that it's maybe a little bit overvalued or whatever at this stage. But if we remove the stock price, I still think it's very, very early on. We've got many years left for this company. So I'm not too concerned. I'm just going to, continue to get little bits here and there. And if it does fall, I'll obviously add more.
Yeah, just adding on the dips, right? And
Hmm.
we got plenty of dips. I mean, not recently because obviously they just got added to the index,
Yep.
but I mean it's still early, right? Like if, historically speaking, when stocks get added to the index, that's the
Yes.
beginning of when they started getting profitable. They got
Hmm.
over the $14 billion market cap line that they have to, and that goes up every
Hmm.
year, right? But historically speaking, it's there's a lot of room. Um, but yeah, I mean, obviously, if you given a choice between buying at 34 or so that it is right now, I'm buying at 10.
Yeah, of
Yeah,
course.
it's not that difficult of a choice. But yeah, I mean,
Hmm.
I was surprised as well how fast it just went up. It's just crazy. The whole AI sort of hype cycle just
Yeah.
benefited them so much. with AIP, and that becoming like a lead funnel to other
Mhm.
more profitable products. That just who could have predicted that? Like I know
I
I
know.
couldn't.
Yeah. I remember when I was first sort of diving in a bit deeper into research, and I saw the potential there, like how they're, they can work with any sort of industry and all this stuff that we always speak about when we're talking about Palantir. But there was that key problem of how are they actually selling? How are they marketing? Because there seems to be like a resistance point. But like you just said, these AIP boot camps and AIP Con, which of course we've just heard that the AIP Con 5 is happening today as we record this. Like that's
Really?
yeah, is they're doing another AIP Con event, and they announced it yesterday, last
Uh-huh.
minute, and it's happening today. So another chance for everyone to hear about how the clients are working with them, and yeah, they seem to have broken through that point now where they're no longer having that problem. Their go-to-market strategy is improving, and yeah, it's very exciting. But just going back to your portfolio before I forget to ask
Mhm.
you, so I noticed that you are quite, like you said, you're quite into fintech. You're quite
Mhm.
into those more growth heavy companies. Maybe some people would say that a portfolio like yours is fairly risky. Maybe, if we compare it to someone who's maybe only investing into an S&P 500, or maybe they have some dividend stocks and stuff like that. How do you view your portfolio in terms of risk, and how has that changed over time?
Of course, yeah. I mean, it's more volatile. I wouldn't say it's more risky
Mhm.
because as long as you own, you know what you're owning. I
I agree
think
with
that
you.
minimizes a lot of the risk,
Yeah.
but it's definitely more volatile, right? Like if you compare the beta of my portfolio with
Yeah.
S&P or even something like Nasdaq, it's just significantly higher, right?
Mhm.
But I'm a little bit more towards the growth side because I think that's where the most opportunity is, and obviously that's
Mhm.
just gonna entail being exposed to more beta, right?
Yeah.
And I can deal with the volatility fine as long as I don't get into like like all of my portfolio being in options or
Mhm.
something risky like leverage. So as long as I don't touch that too deeply, leverage I don't even touch at all right now. I do deal with options here and there, but only when it's like like a no brainer, or
Mhm.
when it's like something like leaps that gives me a little bit more because I tend to be on the early side of my investments, right? Like for Tesla, when I started investing in Tesla, it took like 3 years, 3 years of accumulation, maybe four, before it actually started like turning
Mhm.
around. And a lot of people have, I think it happened to a lot of people with Palantir as well. They saw the opportunity when they
Mhm.
got IPO'd or DPO, right? Like they did a direct. And it just took a couple of years, right, for the market to realize the same thing that a lot of people realized before. So I think I'm on the early side as well, but yeah, I mean my portfolio is a lot more volatile, and that just entails when I'm right, I'll perform the indexes
Mhm.
significantly, and when I'm wrong, I'll have a shitty year. So I'm fine with that, because I have a lot of time to start investing. I'm now in my 31 years old, so
Mhm.
I have a little bit of time. But yeah, but just my style is more risky. I want the most asymmetric opportunities I can find.
Yeah, absolutely. And I think, like you said, if you make a bad selection and one stock doesn't do very well, the most important thing, everyone's going to have that, but the most important thing is that you do have those winners that will just
Mhm.
completely outdo any poor performers. So
Yeah.
I mean, I have many questions for you. I'm sure we'll get around to a lot of these, but I wanted to just ask you a couple of more about your portfolio. So
Mhm.
in terms of allocation, like what do you do about that? Do you rebalance often? Do you trim positions if they're doing really well? Do you not go near? Are you happy with any allocation at the moment? If let's just say HIMS does particularly well and it shoots up to be your third largest, is that a problem?
Yeah.
That's one question. And the second question is, you mentioned how you're often early in terms of like getting into stocks. I want to know like how you do that. How are you able to find positions maybe before other people do? Is there any selection process that you go through?
Yeah. So
Sorry,
let's
you loads
get
of
into the
questions.
rebalancing. Let's get into the rebalancing thing. So yeah, I mean, if I have a position, right, and that position I've owned for more than 12 months, I don't like
Mhm.
rebalancing that much. But if it just runs that I'm like, okay, this is a little bit above fair value, maybe even
Yeah.
double fair value. I have a pretty good idea of what fair value is given growth. So if I've owned it for more than 12 months, then I can sort of trim and then not have like a lower term capital gains tax. So it'll be more like a long term. So I get taxed at 15 to 21%, as opposed to like something crazy like 30, right? So if that's the case, I can trim. And if it's obviously run significantly. So, and then I'll just reallocate into something that has not done as good. So yeah, as you said, like Hims did also a 3x on me.
Yeah.
And I took a little bit of that because I had owned for more than a year, and I took a little of that, invested in SoFi that had done horrible, for it's not done horrible for forever, right? So yes, you can do that, but you just gotta be mindful to not do it when you just invested in the stock, because
Mhm.
the tax bill is gonna be insane. So and what's the other question? How do you recognize the opportunities
Like early
before
on.
everybody else? Yes. So I sort of specialize on like a smaller cap tech that is not profitable, but just getting into
About to,
profitability, right?
yes, I love that.
Yes. So and you can sort of extrapolate that, just given, you can do like a net margin chart, and you can sort of do like a linear regression in which you estimate the pattern that's following, and then you sort of estimate when it's going to hit profitability, because that's when the biggest sort of value realization happens, right? When a company goes from like unprofitable for 5 years to like profitable all of a sudden, it gets re-rated, right? So if you can like identify those companies, and it's really not that difficult if you chart the net income and you
Yeah.
take away like one-time items. It's not that difficult. It's just people are not gonna do the work. Most people are not. And then yeah, that's why I told you the thing about like options, because since I tend to be early, I don't want to invest in options and give myself that time component to also. I need to be right on the timing. I'm just not right on the timing. I know I'm gonna be early, and that's just my bias.
Yeah, I don't get involved in options at the moment. Maybe one day I will have chance to do so, but right now I just don't feel like it's the right thing for me. I
Yeah,
just buy and hold long term. That's pretty much the most boring strategy I know, but that's pretty much what I'm doing at this
yeah,
point.
and that's also plenty difficult too. You know what I'm saying? Most people don't.
It's hard
Uh,
mindset.
yeah, stock picking is hard. If it was easy,
Mhm.
everybody would be Warren Buffett.
Very true. Very true. Um, you mentioned another company that you had that I personally haven't heard about. I think you said they were also in the fintech space.
Yeah, DLO, was that the one?
Uh-huh. Yeah. What's that? I've never heard of that company before.
Yeah. So have you heard of Stripe?
Yes.
So DLO will be the Stripe of Latin America and the growing
Okay.
markets. So they also operate in Africa and
Hmm.
some parts of Southeast Asia, but mostly Latin America. So if you go to Argentina or Brazil and you take an Uber's using DLO to process your payment. So and obviously you have Adyen in Europe. So that's the trifecta, right? Like Adyen in Europe, DLO in North America, and then Stripe in North America, DLO in Latin America, and Africa, and all sort of like the emerging markets. And then you also have Braintree from PayPal that just wants to take everybody's lunch regardless of where they are, right? So that's sort of the whole trifecta of payment processing APIs. So they're growing very fast. I mean, if you believe in Latin America, that's sort of like an obvious play, but
Yeah.
it's a smaller position for me. So in Latin America, the whole idea is to just have access to either Nubank, Mercado
Mhm.
Libre, DLO, or some of
Yeah.
this sort of e-commerce or fintech place that give you exposure, because that's going to be a big market, a
I think so.
big market.
Mhm.
Yeah, for
Yeah,
sure.
that's interesting. I was I've been toying with the idea of new bank for quite a while, thinking about maybe adding that onto my portfolio. I haven't done it, and again, a bit of a annoyance to myself here. I was looking at that before it started shooting up, so but you
Yeah,
can't win them all. You can't win them all, and
of
that's
course,
okay. But yeah,
of
big
course.
market there. I think that's interesting. What is that? Quite a small position for you, DLO, or
Yeah, DLO will be my smallest position.
okay?
Not because it's my smallest conviction play, but it's
Mhm.
just like it's just a smaller, it's just a more risky, uh, more risk, more reward kind of thing. And I have plenty of exposure into fintech, so that's why I keep it lower. But it could happen like any other, right? Like if it triples or something like
Mhm.
that, it could So I think DLO it's also gotten affected recently because the whole like Argentina situation. So Argentina is a big market for them. So Argentina is not doing as hot right now because they're doing a transition from like a more like a left wing government to like more the Milei sort of ways, and you have first you got to cut expenses, right? So that sort of makes Argentina a bad market right now in terms of growth, and that affected DLO profitability in the last couple of months. So now they're getting back to it, but it's just a big market. I think it's second biggest economy in Latin America, so it's obviously going to have an impact. But yeah, that's why DLO is my smallest position. It just hasn't done as well as the others.
Yeah, that makes sense. I mean, you've just mentioned there about how macro can feed in so much. And I think that's another reason why I feel more comfortable just being a more boring investor, because those things you don't know that they're going to happen. You can't predict them all the time. And suddenly, like with Tesla is a perfect example. One day it's doing well, the next day some media outlet releases an article on them, which may not hold any truth. And then suddenly your portfolio is lost like 6% of its value one day or whatever. And if you weren't holding for many, many years and you just happen to be investing during times where that happens often, it's really going to impact your overall success. So for sure.
Yeah, I mean, it's just like that, right? Like, especially if you're investing in Elon, right? Elon is just a very he has a lot of potential to be super focused and do all the things, and then you get into some other like you talk about things that he shouldn't be talking about. But that's why you get right. It comes in the whole package of the visionary genius, right? So if you invest in that volatility of character, you're gonna get the genius, but you also get the sort of ups and downs. And a lot of people think that they get tired of it, or they're just not patient enough, because I think they don't follow the fundamentals. Essentially, it comes down to that, right? Because if you're looking at your stock price just doing nothing for 3 years or just going down, but you see net income going up, the obvious thing is just to hold. Of course, given that you're not investing at a PS of like, I don't know, like a million, right? So as long as you're not investing in a crazy price to sales or like a crazy PE, you should be okay as long as your fundamentals keep going up. And I think that's what's happening that's what happened with Tesla initially, because a lot of the shorts, you remember back in 2017, 18, 19, when the funding security thing, the shorts were just piling. But they were focusing on the negative free cash flow, and they were not following the trend. The trend was obvious, but it's a lot of noise, right? It's difficult to focus on the trend of free cash flow, on the trend of net income, when everybody's just talking bankrupt, tent, funding secure, he smoked pot in Joe Rogan. You know what I'm saying? It's all noise. It's all noise, and people just dial into that, and they don't focus on the fundamentals. It all comes down to not focusing on the fundamentals, and they just sell out. A lot of my friends actually, like many people predicted Tesla. Many people. Even at work back then, I was like just writing software for an HR firm that got acquired later. But a lot of my friends in the office invested in Tesla, and they just never held.
I bet they regret that one.
to this day.
Yeah.
So a lot of people identified it, but since they didn't know if it was cheap or expensive, they sold for a 25% profit. And okay, fair enough. You got your down payment for a Toyota or Corolla. Congrats. But yeah, they missed on generational wealth. Yeah.
It's interesting that you mentioned just a minute ago about how with Elon, he's some people just can't get on board with him, and that's a reason they don't invest into Tesla, which fine, you've got to make your own decisions. But I was speaking to Tom Nash, who I'm sure you've come across before, the other day, filming an episode as well, and he said the same thing. He said along with the genius comes everything else, and you can't really have one without the other. And I've never really looked at it like that until you guys have said it. Like I know that he just comes as a package deal, but you get both sides, and that's how he's so driven and like that. Do you know what I mean? Like it just comes with the whole eccentric look. And I think Alex Karp is kind of similar in a lot of ways. Not so much maybe in terms of like he doesn't have a presence really online, but a lot of people don't agree with some of his thoughts, and he will stand by his opinions and his views. And personally, I like that. I want a CEO that's driven and wants to achieve the mission no matter what.
Of course.
I think that's important.
it takes a little bit of crazy to go against the sort of industries, because
Mhm.
Harvest going against the military industrial complex, and then now they're going into like a lot of the AI plays and
Yeah.
and the ontology part of it. But I think it, and with Elon, right? Like he went and
Mhm.
bought like a rocket from the Russians, or wanted to, right? Like
Yeah.
before, in the early days of SpaceX, you need a certain kind of like individual to be like,
Mhm.
okay, let's just take on this people. Like you need to be a little bit crazy to be like, yeah, let's crew or Boeing
Do it.
or Lockheed or whatever, you know, like
Yeah.
it just and that's what it takes, right? So you got to deal with that. If you're not cool with that sort of character dealing, you know, like leading your company, you just
Mhm.
invest in like Microsoft, you know, or like
Yeah.
Apple or something like that, and they're gonna do well too. It's just you need a visionary for the innovation part, for the getting to product market fit, and then after that, right, like you can have some sort of like that's the whole debate, right, like with Paul Graham and founder mode and all that is trending lately, and it's just different managers for different parts of the
Mhm.
trajectory of the company, right? So you need a visionary, crazy visionary, how they used to call him.
Yeah. I have right now in my portfolio, Palantir and Tesla are my biggest,
Mhm,
followed by Nvidia and Amazon, which are a lot
mhm,
less, right? Compared to Tesla
mhm,
and Palantir, a lot less. And then I have a really, really small amount in some other companies, one being Alphabet, Google. And
mhm,
I've been thinking about it more deeply recently, and it's literally what you just said. They will continue to grow. They will continue to be a massive, massive company and a big, big player in different industries. I get that. But I'm now questioning whether they've got what it takes to move forward in the next era of artificial intelligence. Do they have that light in them? Do they have that innovation and that drive? I don't know if you have any
mhm.
thoughts on that. I'm just sort of spewing what I've been thinking about at you.
Yeah, I think they're gonna play a part, because just the capex, it just makes it so that
Mhm.
it's inevitable. But I don't think they're gonna invent the new innovations
Yeah.
for AI. Like if you think about like machine learning and all the LLMs and all that stuff, I don't think the big companies are gonna be the ones creating all the value, because I don't think the sort of people that innovate at that level are working for Google, or some of them
Yeah.
are gonna be working for Google for a little while, and
And then
then they're gonna be thrown in. They have a section, and the revenue is called other bets. They're gonna
Mhm.
be thrown in there. They're gonna release something that's never gonna see a light of day. Not gonna see any users. They're gonna drop. They're gonna get funded by like Horowitz or Y
Mhm.
Combinator or something like that. They're gonna go and create their own thing. So I think it just it does it takes, as I said, it takes a certain kind of person to push
Yeah. So
the line forward, and I just, those people, I don't see them like working for Google for 12 years or 15 years.
yeah.
uh they're just gonna get funded. If you're that good at writing software, and you're that good at innovating, you're gonna get
Mhm.
funded, and you're gonna have your own startup. That's just the way things are. So what happens is you get a lot of like really good engineers that work for these companies, but they're not the kind of people that are gonna just work on the weekends and like innovate on the new product. They're gonna
Yeah.
have their
Mhm.
big compensation. They're gonna work on search, or they're gonna work on the marketing algorithm or on YouTube, and they're gonna make their contributions. But in terms of like creating a new product, I just don't see it. The incentive
Mhm.
structure is not there. But I mean, they're gonna play a part, right? Like now you see the whole AI assistant and every single search for every single Max 7 company,
Mhm.
right? Like you go on Open Meta, and you have now like a Meta AI assistant for
Mhm.
WhatsApp, for Instagram, for Facebook, all of it, right? So yes, they're gonna play a part, but I don't think they're gonna create the new value. The new products that nobody knows what they are right now. I
Mhm.
don't think the Max 7 is gonna be. They're not. They're not
Yeah.
gonna be a competitor that will
Same.
push it forward.
Yeah, this is what I've been thinking with Alphabet especially, and also
Mm,
like I said, I've got Amazon and Nvidia, which of course are other massive companies, but with my Google position in particular, it's a very very small percentage. I'm speaking like less
mhm,
than 2%, very small.
mhm,
What's your opinion on holding a position that's quite small? In my opinion, it doesn't make sense if you've not got a lot of money to put into your
mhm.
portfolio. But I don't know. Do you have any strong opinions on that?
I mean, it depends on what your higher conviction plays are. as you said, it's Palantir and Tesla, but what's your allocation into those? Because if it's like 70-20 or 50-30, yes, the 1% is not gonna make much of a difference.
Yeah.
And it's just gonna it's gonna be 1 to 2% allocation, but it's gonna take work. It's gonna take due diligence. And
Yeah.
I don't know about you, but I don't have I don't have unlimited time to do research on companies that are not meaningful in that sense. But now, if you have like 20 companies and you have some sort of like team to help you, because
Yeah.
Peter Lynch, he had like, I don't know, like a 2% allocation for Peter Lynch would be a significant amount, because he
A
would
lot of
have,
money.
yeah, he would have a lot of money, and he would have like a lot of positions. I think he would have 20 to 30 at once, maybe more. But he had a team of researchers, right? But for us, like individuals, it just takes your focus away from what should be more important, like Palantir, Tesla, or some of your more conviction plays.
Yeah, and I think that's why I've now got to a point where it is pretty much all Tesla and Palantir, because that's where my research has led me. And naturally, when you spend more time researching and learning and building that conviction, you start thinking, well, okay, I've got, I don't know, $100 to spend today. Where am I going to put it? Am I going to put it in my 8th position that I don't really know much about, or am I going to stick it in my higher conviction plays? Yeah. What's your selection process? We've spoken about a few things. We've spoken about being on the edge of profitability. We've kind of hinted at the whole founder mindset and the leaders in charge of companies. And actually looking at your companies, I think quite a lot of them that I'm aware of do have very strong, very driven leaders. But is there anything else that you particularly, you have to tick off in order for you to want to put money into a company?
Yeah, the biggest thing is revenue growth. That's the start. If you don't have revenue growth, and you can sort of, you're gonna hear a bunch of suggestions if you follow your YouTube channel, as you should, or on Twitter, or Jesse's, or Amit's. You're gonna get a bunch of bombardment of ideas, right? So the first filter, for me at least, is revenue growth. If I don't see like a 20 to 30, or at least getting there, like Palantir was at 18, 19, but then now all of a sudden it's like 27. If I don't see something close to 20, I don't even bother, I don't even bother going forward, because I need to see something that is either growing fast or has the potential to grow fast. So that's the first thing. And you can sort of filter, you can do like a screener or something like that, but I don't think you even need it, right? Like, because as you said, like everybody's bombarding you with stock picks all the time. You just got to screen to do them fast. And that it all comes back to fundamentals. But yeah, revenue growth, as you said, the profitability thing, and then if they're not included in the S&P, even better, because then you have as companies go from unprofitable to profitable in a trailing 12-month basis, then they're eligible to S&P. So the sweet spot would be 5 billion market cap to 20 billion market cap. So that's a sweet spot in which you find the biggest opportunities in my mind, right? So yeah, you can find something like an Airbnb and do well, but the biggest alpha you get in the 5 to 12, and that's when you started, like, buying Palantir, right? And not obviously now it's like 70 something. That's crazy. But it used to be that 15 billion dollar market cap that was gonna explode. You didn't buy it at 70. You know what I'm saying? Like,
that's really interesting.
Go for it. Sorry.
I was going to say, it's really interesting that what you're saying is kind of what I try to do, but I don't really realize I'm doing it. Just naturally, the companies I get interested in sort of do fit those things that you've just mentioned. But your portfolio is pretty much made from that process right there. And looking at, again, back in April, I don't know what it's doing now, but looking at the percentage increase for some of these positions, you've done extremely well. So clearly something that you're doing is doing, wonders for your portfolio. What about in terms of funds? You don't have any index funds, no ETFs? Have you ever had them? You're laughing. Talk us through that.
Yeah, I have. When I was younger, I used to invest on an app called Acorn.
I think I've heard of that.
Yeah, they would invest your leftover from whatever you pay, right? Like, and they would invest that into like some mutual funds. And this when I was like, like 20, 22, something like that, right? Like I was in college. And these people would just invest. And in a good year, the S&P would do 20%. and then Acorn would do a wonderful 10%. And I was like, I'm
Right.
paying these people fees,
Yeah.
like mutual fund fees, not even like index fees, right?
Yeah.
Like, and they were just like cutting my performance in half. They're investing in oil, they're investing in like stupid shit. So and I was like, okay, maybe I could do better. And then I
Mhm.
started investing, and then that's when I started getting into stock picking. So I don't think it's a bad idea, right? To invest on indexes.
Mhm.
In fact, most people should do it. Um, for me, I've sort of done this for a little while now. I have the time. That's sort of my whole career is just charting software, right? So I do a lot of research, right? So if you're gonna do all that research, yes, you could pick stocks, and even then it will be difficult. But for the most part, for the average investor, you should have a significant part of your portfolio into indexes, I think.
Yeah.
And then you can play with your stock picking with, I don't know, like 25% allocation or something like that. I'm just like risk taker. I don't suggest that anybody do any of that, right? Like
Mhm.
the good option is to have your Roth or your 401k, and just have indexes, and then
Mhm.
play around with your 10 to 25% stock
Yeah.
picking
I think so
if you
too.
have the time. Yeah.
Yeah, time and interest. I think interest is a big one as well because
Yeah.
me and you obviously love this stuff. We're happy to sit and
Mhm.
research companies. We find it exciting. A lot of people don't, and that's okay. You know,
Yeah.
for example, I'm sure many of my friends and family members they would think, "Oh my god, that is so boring. How do you find fun in looking at numbers and looking at what companies do?" No, thank you. But those people, I don't think should be put off from investing. They should just simply, and not financial advice, obviously, but in my
Of
opinion,
course.
buy an S&P 500 ETF and put money in every month and forget about it. Like that's probably
Yeah,
the most I guess I'm going to say guaranteed. Nothing's guaranteed, of course, but typically speaking, the market is going to return you a decent amount each year. And if you hold
mhm,
it for a long period of time, you're probably going to be better off than if you didn't do that. But again,
for
long
sure.
period of time.
For
Um,
sure. Yeah, and then we have access to like the biggest market in the world, right? Like we
yeah.
have access to the best companies
Mhm.
just piled in there, like in a very nice list that is curated from like the trash. And the whole economy moves in the S&P, right? Like so I think if you have access now, if you live in, I don't know, like some sort of like village in Africa or in Southeast Asia, you don't have access,
Mhm.
okay, fair enough. But if you live in the first world, why not give yourself that sort of advantage in retirement? Especially with the Roth, right? Like now that
Mhm.
what is it, like Robinhood offers the Roth, it's just unexcusable.
Yeah.
Because even if you are a contractor, even if you don't have a plan with your employer, you can open a Roth and just put your 7.5k there, invest it on an index, and
Mhm.
in 20 years, you're just gonna be set. You're gonna be way set. So I think not taking advantage of that is a mistake.
I agree. I agree. We're going to talk about we're going to talk about Tesla. We're going to talk about
Mhm,
your company, which I'm excited to talk to you about, which I personally use, and we'll get into all that.
mhm,
But just before we move on completely from your portfolio, I guess the two last questions I have are: what are the plans moving forward in terms of short-term and long-term plans for it? And if you're having a look at your portfolio right now and the companies that you hold, are there any ones in particular that are the most exciting opportunities for you right now?
mhm. So the first one was about Tesla, right?
No, the first question was what are your plans with the portfolio?
Oh, okay. So I
Like
mean,
short term and long term.
yeah, short term, I don't have any like particular plans. I think the stock that has done bad is SoFi, so that's why I'm adding to it. I just
Mhm.
think the price to sales is just too ridiculous. Below three, I think it's between 2 and 3, growing, I don't know, 30 to 40%. So it's in my sweet spot, just hitting profitability right now.
Mhm.
So I think the short interest on that one is just a little bit too high, and I've seen this movie, before. So you know what I'm saying? Like I've seen the 15 to 20% short interest on our company growing 30 to 40, about to turn profitable. We've all
Mhm.
seen that movie before, and we know how that ends. So that's that, right? And then in terms of long term, if I could get like a dip on Palantir, probably buy that.
Mhm.
On HIMS, I think HIMS is an interesting play because they're now
Okay.
getting
Company.
into, yeah, Hims is a medical company, medical subscription company. They got famous because they used to sell like dick pills and hair loss products.
Yeah. And now they're
So
doing
they,
like weight loss stuff, aren't they?
yeah, exactly. Now they're moving into like weight loss and then hybrid drugs, which
Hmm.
means they're gonna. This is the golden goose in the medical industry, right? Like selling a pill that would treat like five different things, very particular to you,
Hmm.
like custom medicine like that. Uh, that has never been able to be done before, and they're now getting into this. If this works, this is significant because now it becomes very sticky. Your subscription becomes very sticky because no other pharmacy will give you a pill that takes care of five different things that are very particular to you. Who's going to give you that treatment?
Hmm.
Nobody, right? So that's a very interesting one. If I had um dips on that, I would probably buy that one as well. But I mean, my average cost is like in the sevens. So
Yeah, you're doing well on that one by the looks of it. Really well.
yeah, that was. I don't know if you some of the guys in the Twitter space recommended that one, and I saw it. I was growing like 80%. I was like,
Mhm.
what? 80% price sales of like 1.7? Give me that right now. The research took like 10 minutes. It was so obvious. And yeah, so what's the other question? Sorry.
We're just talking about your plans of your portfolio. Like, are you like long term? Are you looking to start like selling portions and living on that money, or is this very
I'm
much
already living on it.
you already are?
I
Okay,
Yeah, I quit my corporate job at 27, like 4 or 5
amazing.
years ago. Yeah, on Tesla, and many people did too. Like this is not nothing particular of me,
Uh-huh.
but I sort of live on, because visual stocks is getting profitable, but it's not
Mhm.
profitable quite yet. Like the development cost is really quite high. Um, but so I sort of live off stocks, and that has been the case for 4 years. So if I don't perform,
Mhm.
that's sort of
Go
like,
back to work.
really that you want an incentive to actually do your work and do your research. If you don't, you don't eat. That's the sort of incentive I've had for 4 or 5 years. So yeah, I sort of live on it.
So you're just selling bits every now and then to
Yeah,
live
I
on.
take
Is
some
that what you're?
profits here and there. So I think I get paid for making one good decision per year. If I can make one good
Yeah.
decision per year, I'll do well,
Mhm.
and not make stupid decisions. Like I made so many stupid decisions, so it's
We all
as long
have.
as I don't repeat them, yeah.
Yeah, exactly. So are you, from what you've said, and correct me if I'm wrong,
Mhm.
you're buying more of the positions that you think are undervalued or have taken a big hit, and you're
Yep.
going to continue to do that. Are you not adding to all of them all the time? Is that not?
Well, if I find like a really good stock that I'm
Mhm.
like, this is insanely undervalued and growing and it's misunderstood, for sure.
Mhm.
But I just don't find those every day. You know what I'm saying?
Often, yeah.
Like, yeah, but if I do, of course. I mean, I think I'm at 10 to 13% cash right now. So I mean,
Mhm.
I have a lot of dry power to open a new position if I find it.
Yeah.
But yeah, I just haven't. That my last addition was PayPal.
Oh, yes.
PayPal looks like a winner, just from the ratios part and the free cash flow and the comeback, right? So, and they're
Mhm.
doing a lot of buybacks as well. So the PayPal is not my typical investment, but it's just so ridiculous. I think 4 PE was something like 15. That's crazy. Like if you look at the shares outstanding chart, it just
Yeah.
looks like a upside down S. Like it's just crazy. So that's why I bought that one. But I don't find like good opportunities every single day. That's just
Mhm.
the nature of it, right?
Yeah, of course. So which one of your positions that you've already got now are you most excited about
Yeah, for sure. SoFi. It's not
so
even
far?
close.
Mhm.
Yeah, SoFi is what Robinhood was last year in my mind, right?
Okay.
Like if you line the price to sales, if you line the trajectories, it just matches, right? Like it's in that sweet spot, two to three times PS, about to turn profitable, visionary leader, that kind of thing.
Mhm.
Um, so yeah, I think SoFi could do really well, and you see a lot of the retail community just getting out of it right now. Right now,
Oh,
as
really?
they're
People are
about to,
getting rid of it?
Yeah. I get harassed every single day for investing in SoFi because it's done so badly. Like people just call me idiot every single day on Twitter because
Hmm.
SoFi has done nothing for 3 years. And now I just recently started investing it because I'm like I'm seeing all the chart and seeing 3 years of accumulation and a down channel. And we're about to break out.
Yeah.
We're about to have record profits in Q3, and it's so cheap. And people are like, "You're an idiot. You're an idiot." I'll buy more. So
Yeah.
that's what I'm more interested about, and I've been learning a lot about like Galileo and how it integrates because my background is in software and all that. So I see an integration, an API integration to create like a credit card, and I get
Mhm.
excited, right? Like so, I nerd out on the documentation and see what they support and all that. And I'm like, this could actually be like really interesting, right? Like,
Mhm.
and they support what 170 something million accounts. That's like half of the U.S. population there. You know what I'm saying? So I'm like, okay, this could turn into a winner. I see all the ingredients for it to become a
Mm.
winner. So that's why I'm excited about SoFi, but I'm no expert in SoFi. There's better people for SoFi research. I like it very much in terms of valuation, in terms of trajectory.
Yeah. I don't hold SoFi, so I can't claim to know an awful lot about it. But whenever I've sat down to do, even 10 minutes of research on SoFi, let's say, you you can use your website, of course, and we'll talk about this in a minute. Even if you look at the earnings, like what you're gonna see is very quickly, you're gonna see visually charts that are doing this with SoFi. All
Yes,
of them. All of them.
yes,
They're just so I mean, if you just stop there with your research, you've already probably built some conviction. So for
yeah,
me, the reason that I haven't added a position in this one is just purely because I don't fully understand it yet. And I just
hmm
don't want, and I need to probably understand it sooner rather than later and not just
yeah,
leave it in the background. But yeah, I've not really ever invested into a company like them before. So there's a lot to learn about the industry
yeah.
and stuff for me. But
Yeah. It's not
really
simple.
interesting.
Banking is difficult. Banking is difficult to understand. Like even now, like I don't fully understand the whole process of doing because they have the whole lending part and the financial
Yeah.
services, and one feeds into the other, and they have
Yeah.
capital requirements and just the loan balances and they sell those loans to other financial firms, and
Mhm.
they make money on that, but they also make money on holding the loan on their book and getting interest on that. It's
It is a
very
lot.
complicated. It's not like okay, hymns, okay, understand that they're selling pills on a subscription. I'm like, boom, easy. But let me tell you, so far I don't think it's as complicated as Palantir. I think Palantir is more complicated because Palantir is, unless you know somebody who is a client or somebody who works at the company,
Mhm.
you've never tried that software.
It's true.
uh so I think it's if you could understand Palantir, you could definitely understand. So I just gonna take time, right? Like nobody understood Palantir, and even at first I was like, Palantir, how do I even try their product?
How do you start?
You know?
Yeah.
Yeah, and then I started thinking back in my corporate America
Mhm.
times, and I was like, well, there's so many times in which my manager will come to me and be like, hey, I need you to write this sort of SQL query to like get some sort of information from our data, and I'm like, I put two and two together. It's like that's exactly what Palantir is doing,
Mhm.
just getting to the bottom of your, like, you got your ontology and you want insights out of that.
Yeah.
Before, you need to have a team of engineers to do all that sort of analytics work. With Palantir, the manager doesn't have to go back to the engineer. They could just do it themselves.
Yeah.
They have the ontology. They could just write the do the little connections, and they have their answers. Back in
Mhm.
the day, it was all, you talk to the engineer has to stop what they're doing,
So
write
much
your little
time.
SQL
Yep.
query. Yeah, all of that. And then I put two and two together. And then
Mhm.
so it's consulting and software together. That's beautiful. Brilliant. How did
Yeah.
nobody do this before? And then you get the 80% gross margins, right? With SoFi, similar, right? It's just gonna take time to understand the banking side of it.
Mhm. Yeah, I think for me, Palantir, the first sort of thing that I understood, which is very basic looking back now, but it was the whole idea of, okay, well, I've been at a company where there's been many different pieces of data from many different pieces of software, basically.
Yeah.
It's different legacy systems, and then this system, and if you want to access this piece of information, you have to go and ask. Karen who's sitting in the corner for her password, and it's going to take you 3 hours to get whatever. It's just a lot of companies, whether they've acquired another company or whatever, it's a bit of a mess. So just the idea that you could, and this is back when I didn't know much about it, I was thinking of it as a way, okay, well, Palantir can help make sense of data that is so just, what's the word?
Sparse around.
Yeah, just spread everywhere around a company.
Yeah.
And I think at that point I was like, oh, okay, maybe I do understand at least a little bit of Palantir. Let me dig in a little bit deeper and a bit deeper and a bit deeper. And then obviously over time, I've just done more and more research, and I'm no expert now at all, but I like to think that I would probably know a little bit more than the average person walking their dog on the street, at least.
Yeah, for sure.
And it's
For sure. Once you make those connections, right? Once you make, because as you said, it's a bunch of different database, a bunch of different legacy systems. And once you do the ontology on all of that, the stickiness is incredible, because
and we're seeing that with our customers. We are seeing that.
Yeah, your net retention is going to be insane. Because once the switching cost is so high, and that's why you have the average client for Palantir is doing like 1 million in sales for them in each quarter, right? And then the closest competitor will be something like Snowflake. The average customer for Snowflake does like 80K in sales per quarter, right? So you got your average client is 4 million in ARR, and then your average client for the closest competitor is like what, like 200? It's not even in the same ballpark, right? It's just different kind of clientele.
Yeah, and then you start piling on the defense side, the government side, and then you pile on, okay, well, FedStart, what's that all about? How could that give them a little bit of a competitive advantage in that arena? And then you've got the CEO, who a CEO is really important in terms of what companies I'm investing in. And like we just said earlier, Alex Karp is one of these people that are very mission driven, and I like that. And you can just dig in deeper and deeper and deeper and build your conviction for Palantir, in my opinion, quite easily. But just going back to the SoFi thing, I think it's because with Tesla and Palantir, just speaking about artificial intelligence, it's interesting to me. But when I start digging into lending or whatever, it's not igniting that excitement as such.
You got that passion for lending? What's wrong with you?
I'm trying to find it. Yeah, I'm trying to find it. It's somewhere.
But you don't see personal loans on a screen and be like, yeah, sexy.
Yeah, I'm just like, yeah, that's my evening, my Saturday night. Not quite.
Yeah, no, I understand. It's there's nothing more boring than banking and lending and financial services, to be honest. That's why we have Galileo to save the day, to actually inject us with some sort of excitement. But yeah, I mean, I understand 100%. I mean, there's some guys who make it interesting, like Tanner and Chris from and Twitter. You can find those guys. Makes it a lot easier for me. But yeah, once you get into like the really like banking nerds, it just flies all over my head. You know what I'm saying? But it's worth looking at it.
I'm gonna.
It's worth looking at it, because Jesse also did like some sort of analysis on the technical sites, and they're being on a down channel for like 3.5 years, and I'm like, that's crazy. It's like 3.5 years of accumulation, and they're about to break out, and I'm like, okay, if I don't invest now, I'm gonna feel bad if they double on me. The same thing with Palantir is not gonna happen again. So or it could go down. Maybe I'm wrong. It's happened before. Maybe Tanner and all.
Yeah, what's the saying? The longer the period of time, I don't know what the saying is, that you basically accumulate, the higher the, what's the saying?
Yeah, the higher the channel, the longer the breakout, or something along those lines.
Something along those lines.
Yeah, so because there's been more accumulation in this sort of period. So I think Kathy Wood said it once, and I think it ran true with Tesla. I think Tesla is also in a period of accumulation, right? Because they've done nothing since 2021. 2021 did they come down? But they're now in this accumulation phase where they haven't quite released the next product that will take free cash flow onto the next level, or net income onto the next level, the next leg of growth. It could be Cybertruck, or it could be FSD, or it could be something else. We don't know yet, but it's in that period that when it explodes, it will join the other Max 7 onto the 1T or maybe 2 trillion market cap. but we're not there yet. But you know, it happens with every single company, and that's the period in which people get sort of
Or
impatient.
yeah,
Yeah,
yeah.
yeah.
And we're seeing
They,
that. I see a lot of comments saying, well, it hasn't done anything for 3 years, like rubbish, rubbish, rubbish. And I'm sitting there like saying the same thing over and over again. Well, this is coming. This is think about this, but it's boring to keep saying the same thing. But yeah, for
yeah.
me, it's fundamentals
And you
are
give them like
win.
five, you give them like five examples, and they're like they just still don't see it. You know,
Yeah.
it's like investing 101. Past performance is not indicative of
Yeah.
future results, and they just flies over their head. No,
Yeah.
but like it's done nothing for 3 years. Past performance does not indicate anything about the future results. It
And
could have
Tesla
done that
moves
for 20.
fast. Yeah.
Uh-huh.
And Tesla
Yeah,
moves fast. Like you probably more than me. I've not invested into Tesla since, was it 2017 you started?
yeah,
Yeah. So you know this more than anyone that's probably talking about Tesla these days. Tesla can do that very quickly, the same way that they can do that very quickly.
yeah.
But let's stay on Tesla for a bit, actually, because
Mhm.
it's very interesting that you've been investing since 2017. What was it back then that you were seeing that made you start that position? Do you remember?
Yeah, so I think back then they just had introduced the Model 3,
Okay.
and they haven't they were like in sort of a production hell,
Mhm.
if you say that.
Mhm.
And then in 2018, um, they were starting to deliver some of the first Model 3s and whatnot. And it was just so obvious because you had a company that was worth $30 billion, and they're selling $22 billion worth of cars
Yeah.
per year. You're like, okay, let me compare. And people are comparing that to like Ford or GM,
Mhm.
or completely missing the point. Because yes, if you compare it to GM does at 0.6, right? If you compare it to that, yeah, Tesla is 3 times that. Okay, maybe that sounds expensive, but GM was not growing at all. Those are
Mhm.
reason for GM to be trading at that PS. So I think a better comparable would have been Apple. So, and then when you do that comparison with Apple, then you realize, okay, we're a ratio of what Apple is. Apple is like typically in the 7 to 10 price to sales range. So, and the reason why you compare it to Apple is because Apple sells hardware at a
Mhm.
30%, 20 to 30% margin. And that's exactly what Tesla was doing. So Tesla had double the gross margin of the auto industry. They were growing at 40 to 50% every single year, and they were trading at a multiple of the industry, but like super discounted to like something like Apple or Amazon or whatever. So I think what people where the shorts were mistaken is they did the wrong comparable. They use industry
Mhm.
comparables as opposed to other similar gross margin comparables.
Yeah.
So it just became very obvious. You just had to see at the gross margin. And I also bought my Model 3 in 2018. So I started in
Mhm.
2017, bought a Model 3 in 2018, and I tried it and I was like,
You loved
I
it.
took it like, and literally everybody, every single member of my family would fight to
Yeah.
drive that Model 3. It was just, and we had other cars, right? We had like a
Mhm.
RAV4, brand new RAV4, and we had a truck. Just people fighting over my Model 3. It was just, at this point in time, I don't even use it. I just gave it to them, like just enjoy. So that gave me a lot more conviction.
Mm.
So, in 18, and then 19, my company got acquired for like $11 billion, something like that. So I,
Nice.
I had a little bit of money because my stock options
Yeah.
vested all at once. So I had a bit of money, and then I just piled in. So it was a period of accumulation.
Mhm.
And it wasn't until 2020 that I started seeing my thing on the green. It was just red for like 3.5 years.
And you're like,
It's just
wow.
I was like, whoa, this is crazy. I'm actually making some money on this. Um, but yeah, every single time I was just looking at the margins and the trajectory of the business,
Mm.
not what people were saying. Um, because back then the shorts were nasty. They would get on like Seeking Alpha and just like ride hit piece after hit piece. They would fly drones over the factory
Mhm.
to see if they could find some sort of like um bad thing. It's just crazy. I was like, guys, get alive, you know. Uh, yeah, it's just crazy. But that's the whole process of Tesla. And many people did well. It's just
Yeah. It's funny that you said that because like I said, you've been investing into Tesla longer than me. There was a time recently, I don't know, maybe like a few months ago, when Elon and Tesla were getting quite a lot of hate. And
Mhm.
maybe I tweeted or something and said whatever my opinion was. And someone that has also been holding Tesla for a similar amount of time as you have said to
Mhm.
me, "Oh, this isn't as bad, nowhere near as bad as it was back then," which is what you're saying as well.
Yeah,
So it's pretty
yeah.
bad back then by the sounds of it. What
Yeah, they were close to being bankrupt at one point in time because
yeah.
their levels were high and their cash flow was, they had just quite enough capex to survive and that's the whole, like, they did a tent, and that was
Mhm.
their production line, and that saved the company essentially. But I know they could raise money if they needed, so that's, but yeah, anyway.
What was I going to say? Oh yeah, do you still buy Tesla now?
Not really, no. I don't buy it at the moment simply because I mean my average is like 17. I don't want to ruin that.
Oh,
But
that's
but
like dreamy.
yeah, no, I mean, um if I see something like Cybertruck just selling like hotcakes,
Hmm.
um I need to see the margin above 20%. And then if I see them at the same valuation, for sure, yeah, then I need to start buying. What happened with Tesla is that the interest rate environment just created such a competitive space in
Yeah.
the auto industry that they went from 31% auto gross margins to now like 17. So I
Hmm.
need to see that trend reverse before I
And
buy more.
yeah, and maybe we'll see that with the next era, where they move
Yeah,
into software more than they've ever have before.
yeah, but even then, that'll be under the services. That
Hmm.
is doing fine. In fact, also, like, it's like auto services and then energy. And energy
Hmm.
is now like the most profitable
Yeah.
segment. And I'm like,
Yeah.
wow, this is crazy. Like energy is like 25%. And I'm like,
And
when,
highest margin.
how?
Hmm.
Yeah, it's crazy. It's crazy. If I see something like energy going up, or we're close to FSD or whatever, like I have FSD. Like my brother uses my car all this, and so I'm like, hey, I'm in Argentina, so I cannot just drive it, right? Like there's no Teslas here. So I tell my brother, hey, test it out, make sure it's, and then give me a report after. So, but if I see something like that, something like where the whole margin profile of the company will come back, and I think it's gonna come back even without FSD, because as interest rates go down, which they're gonna start doing now, we just have a bigger market.
Yeah.
The car becomes cheaper, and then people buy more, and then that just pushes margins higher. So I think, but we need to see that. If you see that chart, it's just like this. And
Yeah.
do not fault of their own. This is not Elon's fault. This is not like Tesla's
This
team's
is
fault. This
macro.
is just, whose fault it is? Jerome Powell. Jay Powell, that clown. I'm not even gonna go on a rant on that guy. But anyway,
Yeah, we won't get into that one because we really will both be here for a long, long time.
yeah,
Let's speak about visual stocks. Let's do
yeah.
that for a bit because that is
Mhm.
so interesting. And for people that don't know, you'll probably give it a better introduction than I will.
Mhm.
But basically, it's your thing, it's your business. It is a
Mhm.
fantastic platform, in my opinion, to go and just visually see what you want to see. So for me, when I first started investing, looking at the numbers was quite a lot, right? That you see
Yeah,
just a page of numbers and you're just like headache, headache, headache. But to
yeah.
see them visually and just look for patterns and trends, it
Mhm.
takes out that barrier to entry. So I think what you're doing, you didn't ask me to say this or anything, but I think you're doing a fantastic job. Um, and yeah, I
Thank
think
you.
it's going to grow big time. But tell us about that. How did that get started? What's going on with that?
Yeah, those are previous sort of charting tools called hyper charts or something like that. And I used
Okay.
to use that quite a lot. It helped me a lot identify opportunities in the past. But that one got acquired by like public.com. So I was like, okay, I ended up with nothing. And I was
Mhm.
just paying for a couple different like products here and there. And I was like, man, none of this has really like what I need. And I was like, maybe I could build it. I had a little bit of time. I had just Tesla had just done a 20x on me. I was like a little bit retired in Europe, just drinking, sipping margaritas in
What
Greece
a
or some
life.
shit. Like, yeah, and I was like, wow, I'm sort of misusing my God-given talents, and I need a charting software, right? So I just started building it, and it's as you said, right? Like it takes a lot of time to take all of those tables and all of
Mm.
those spreadsheets and turn them into like charts. So, and I would do that, right? Like I would go and go into the ER, the earnings reports, and then sort of collecting all that data and then charting it out. That took me so long. And I was like, why don't I just make something that will sort of speed up this process for me?
Yeah.
Because I cannot just, like, it will take me like a week to do the DD on like a new company, which is crazy. So I built it out, and then I built it for me. I didn't build it for anybody. And then I started posting like the charts, and people were like, "Okay, can you open this to everybody?" And I was like, "Sure, I guess." And then people were asking me for new things, and I was like, "Okay, guys, if I'm gonna build out the short interest part, that cost me money. You know what I'm saying? It cost me to host it. So that's when I did like a premium version for the people who wanted the more interesting charts, like the short interest, the inside buys, and all that. That cost me now a lot of money. So and then it ended up being what it is today, and we're still building it and all that. But the whole point of it is just shorting that time to do the analysis, right? Shorting that sort of spreadsheet, all that, like getting those tables and charting that out, that's just not very pleasing. That's not fun at all. So if you short that time to do the research, you can now research 10 companies as opposed to one per week, something like that. So that's the whole point behind it. And then, it's grown, and people are now like using it every day, and it makes me happy because when you're an engineer and you build something and people get like, it's valuable to people, and people get it makes people happy and makes people better investors. That's the whole point, right? So yeah, I mean, I also use it every day. Like I just don't think I could go back to the old ways of charting that in Excel.
Yeah. I and again, I'm not just saying this because I'm speaking to you. I use it pretty much every time I do any research. It's there, and it's a tab, and it's open. And I was using it before I even realized it was your thing, to be honest with you. So it is cool that we now get to speak about it. So for people listening, in case you didn't know, I will leave a link in the description so you can go and check it out. But it's visualstocks.com, I want to say. Yeah, visualstocks.com. Visual spelt with a Z for anyone listening from the UK. And you can sign up and you can use it for free with the basic features, and that will give you a lot of stuff already. Or you can obviously use the did you call it the premium package?
Yeah, I have 2 premium tiers. What it gives you is access to like more sophisticated charts, like the short interest is a popular one, the estimations for analysts, so that sort of thing. But all the basic charts are free, all the ratios are free, all the valuation metrics, growth, all of that is free. Then we also have like ownership. We have an earnings calendar that people like as well, to track all the earnings stuff. So it's sort of like, have you seen like Earnings Whisper? Sort of same format. But now, like if you favor like a company, I'll bring it to the top. So you always have the top companies near your eyesight, right? So that's that. And then last but not least, we have a charting engine, which is if you want to make new charts, then you can.
Oh, cool.
So all of the charts that you see in the regular dashboards is custom made for every single company. That's what I wanted as well, because all the companies are different. So for example, SoFi doesn't make a lot of sense to have free cash flow, because the way the customer funds go in and out doesn't really tell you anything. The same for any other bank. So instead of them having a free cash flow, they'll have like an EBITDA chart and an adjusted EBITDA chart, because that's the closest you can get to free cash flow for a bank. And then you have all the members or the Galileo, which is not compatible with any other company. So all the companies have their custom dashboard, and all those charts we've made personally on the chart engine, and then we just save it to the dashboard. So
that must take you a long time.
So long. That's why it's expensive, because I have to hire like an analyst to help me with this, and make sure that I train them correctly, and make sure that they know the company before we design the dashboard. Because we want them to just look at the dashboard and be like, okay, I understand this company, even if I've never seen it before. I'm like, okay, DRAM, okay, this is probably a semiconductor. So I want people to just look at the dashboard and be like, I get it. You know what I'm saying?
Yeah,
just at a glance.
It's true actually. Whenever I've been looking at different companies, I always notice that depending on the company, you do see different charts, but it makes complete sense as to why. Like for Tesla, you're going to look at particular areas of the business maybe, but you're not going to need that same thing for HIMS or whatever other
Exactly.
company. That I
Exactly.
think that's a really strong thing that you do actually, because that's a personalized experience for someone.
Mhm.
Whereas maybe if they I don't know even if any other companies exist that does this, to be honest with you, but if they do, it might be very standard, just the standard stuff, the
Yeah.
revenue, and you don't really get that insight into, okay, well, this area is growing or this metric's doing well, and that's applicable to this sector. So it's cool. Really, I love it.
Yeah, I remember back then, yeah, the standard was something like Voodoo Focus, and that's what I used. But it just gives you standard, doesn't give you like company
Yeah.
specific KPIs, and it really doesn't design any dashboard for you. So if there was something like that a year and a half ago, I would have
Mhm.
been using it. To this day, I
Yeah.
would have been happy. So but yeah, as you said, it does take a lot of time to do the research. And sometimes I'll be like, hey guys, I'm designing a dashboard for this company. What charts do you want to see? And I source it from even Twitter or X. So
Yeah.
I do a lot of that as well. But it just takes time. It is what it is.
Yeah. Cool. So we've obviously gone over the hour mark, so I don't want to steal much more of your day. But should we just maybe end on any like mistakes that you've done in your own investing that you could maybe share with the audience? Because some people watching my channel are very new to investing. Some people have been around for a very long time. But I think it's really, really important. Something that I try to do in my newsletter as well recently is sharing people's mistakes, because
Mhm.
everyone's so quick to shout about their wins, right? And that's great.
Yeah.
But
Mhm.
everyone makes mistakes and everyone loses money on positions, and that's okay as well. So if you've got any big
Mistakes.
mistakes, yeah.
How much time do you have? We could go over the whole day. No, I mean, I think the biggest is leverage, for sure. Like, it's not
Mhm.
even close. Leverage could help you on your way out tremendously, and then you get addicted, and then you only have to mess up once, and then it will really ruin your portfolio. So I think leverages don't even like think about it. Like, it's not worth it. So leverage is a big no. Um, Even if you know what you're doing, even if you know
Mhm.
what you're doing, leverage is a big mistake. And then the second is, if you're gonna invest in options, I think, uh, don't. But if you really want to, don't do short-term options. Short-term options are,
Mhm.
it's just like going to the casino and lighting uh money on fire. Like, it really does not work.
Mhm.
I know, because a lot of my friends are pretty good at selling you those contracts, and they make a ton of money on that. So the house always wins, or if they know what they're doing, they're gonna win. So if you're gonna do options, do leaps. Do like a
Mhm.
year out or 2 years out. Give yourself time to be right, and don't invest a lot of your portfolio. I mean, not financial advice, but I'm just saying, like, those are the biggest mistakes. Number one is leverage. Number two is leverage. Number three is leverage, and number four is don't do short-term options. And then obviously, re- like, do your own DD. Obviously, don't 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 take what anybody says as gospel. We're all
Mhm.
human. We all make mistakes.
Absolutely.
So do your own DD.
Yeah. Very, very good. Very good pieces of wisdom there for us. So I appreciate that.
I've lost
Well,
that money, so you don't have to.
yeah, exactly. You've done us all a favor. But I really appreciate your time. I've really enjoyed this conversation. I think I've learned a lot from you. Hopefully we'll do it again in the future. To
Of course, yeah.
anyone listening or watching, I will leave Ali's, hope you don't mind me calling you Ali. I did ask you,
Oh,
right?
that's fine.
Cool. I'll leave his X handle in the description along with Visual Stocks, which is the website we've
Mhm.
just been speaking about. Can they find you anywhere else, or is it just primarily through those two?
I mean, I have Instagram as well, but don't worry about that.
Okay.
That's just for other things, like views and votes. But yeah,
You
for the
vote.
important stuff, Twitter and Visual
Cool.
Stocks.
Amazing. So that's
Thank
where
you,
you can
Haley.
find them, guys. Thank you. Appreciate your time, and hopefully I'll
We
speak
should
to
do
you again
this.
soon.
Yeah, we should do this some more time.
Cool.
That's fun.
Thanks. Thanks again.
Have a good one.